You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. Well, we got a little bit of a banking crisis going on. Is it going to spread? Is there going to be a global contagion? Looking a lot like that could be the case. And what does that mean for you? Is your deposit safe? Is your ATM card going to work? And more importantly, is your credit card just going to stop working one day? We've always known this day was going to come. We just didn't know when. Hey, here with us now, financial expert Edward Siddell. Eddie, it's great to have you back on the show. Banking crisis?
Hey,
is it going to be
for having
conflagration? Hey, always great to have you, Eddie. So is it going to be a cascading collapse of the banking system, or are the world's central banks going to step in and print to infinity?
You know what? I think it's going to be both. I don't think there's really an option here. When you look at it, I mean, you're talking about it before, right? It's really a money supply, a credit crunch. When we look at it, the Feds are trying to reduce their balance sheet. And shockingly, I still can't believe, when you listen to the interview last week, Powell almost seemed shocked that they were in the situation that they're in. I mean, they created this. You can't have, 0% interest rates for 12 years, add $6 trillion to the national debt in less than 2 years, and assume that inflation is just going to disappear. These banks, they bought these treasuries, 10 and 20 and some even 30-year treasuries. I mean, if we look at TLT last year, the 20-year treasury was down at one point in time 35%. So the balance sheets, they're upside down. Now, even though the Feds are saying, hey, you know what, we're not going to do another round of quantitative easing, so this really isn't a bank bailout. So those are two lies, because it's a toxic asset swap. They're taking these assets that they're losing money on. They're down 20, 30, as much as 40%. They're swapping them with the Feds. And the Feds are going to reimburse them, 100 cents on the dollar. I mean, that's a bailout. Not only that, we're adding to the balance sheet. So that's inflationary there. And then for the Feds to turn around and increase interest rates 25 basis points last week, I don't think, none of us know what they're doing, and we can't understand it. And the sad part is, I don't think they know what they're doing, and they can't even understand it. And that's the sad part. So they've created a situation where right now, the banks, it's a credit squeeze. They need to make money. They can make money. All of us, everyday Americans, we're looking at it saying, how long is this going to last? Is our money safe? And, are they really going to bail us out? Well, Yellen already said, if you're basically not one of the four banks, too big to fail, you're really not going to be bailed out unless you're a special interest bank like SVB. Anything over that 250,000. Now, I think those deposits up to that 250 or joint, 500,000, those different types of accounts, I think they're in good shape. But yeah, this is just I don't even think we're at the tipping point yet. I think it's going to continue to matriculate, and it's going to get uglier before it gets better.
Yeah, well, obviously, we don't have the A-team here running things. Like back in the S&L crisis, if you remember back that far, this wasn't allowed to spread, this conflagration. Even in 08 and 09, once they realized they screwed up with Lehman Brothers, they didn't allow any more banks, any more depositors. Everybody was safe. But here, I think the government has agreed to basically backstop all deposits. And if somebody's taken the hit, it's going to be the shareholders and the bondholders of these various entities. And obviously it's emerging. So if some hedge fund goes belly up next, They don't have depositors. So what do they do then when they're holding billions and billions of dollars of derivatives and they could sink the system? That's what's going to be interesting. Bank failures, we've been dealing with them for, upwards, since their banking was formed. It used to be in the town when the bank got robbed and they took all the money in gold, that was the end of the banks. That was the end of that bank. We've evolved to hey, their maturities, their yield curve is out of control and they're losing money, and that's how they collapse now. Other times it's been fraud. Bank failures we could deal with. This systemic collapse of derivatives that's going to blow up in the wake of this, that's what I'm looking to see. And look, they just said that SVB was going to be acquired, right, by another bank. The mistake was it should have been done 2 weeks ago. It shouldn't have been done now, where the confidence to the system has already been hit. I always say, banking systems, monetary systems.
When they knew.
Yeah, they've known this for a while. It didn't just happen, right? So they've been behind the curve, and it's incompetence or deliberate. Take your pick.
Well, that's what I was going to say. It's the level of impotence, the level of non-action, and incompetence. I mean, that's really what it is, from Yellen to Jay Powell, and I would almost say it's spread across for the majority of the board of governors for the Federal Reserve. And I'm with you. When I say the banking failure, that's what's concerning me, or the mortgage-backed securities. And I think it's the commercial market, the commercial real estate, and those loans. That's going to be the big hit on the system. That's going to cause the continued issues going forward. Because you got to remember, a lot of businesses were buying these buildings for pennies on the dollar. As far as interest rates, you're to get a commercial loan at 3.5, 4%, and they're variable. Or they had a 5-year balloon and now they have to refinance. They just can't afford that to cover that debt service. And especially with COVID, if, they're only 30% occupied, why would they continue to pay that? And it'd be cheaper just to walk away. And so, most of these banks, they own, 60 to 70% of those buildings, because most businesses are only putting down, 30 or 40%. So that's where the big hit is going to come from. And I think it's going to be sooner rather than later.
So, but the one interesting thing, that during these credit contractions, which we're going to go through now, and because currency is effectively a debt-based currency, I guess we're going to see deflation. But what's interesting is that in normal times, the reserve currency is always the beneficiary of all of this chaos and uncertainty in the financial system. And we've seen it with the dollar. The dollar, okay, it's gone down a little bit in recent times. It's at 103 right now, but it was up to 105.6, 7. And it's just been building up to this. It's obvious.
It is. And I wouldn't be surprised if it not only breaks 100, but gets into the low 90s by the end of the year. And I'm with you. It's not just deflation. In order to get out of this mess, we have to have a growing, thriving economy, a real GDP number, not one based on trade deficits, smoke and mirrors, high value of $1 and we're exporting oil, because that's really not real growth. And, when we look at the numbers and what needs to happen, the stagflation with what the feds are doing. I mean, did you hear that they're actually talking about, having not only not raising rates, but actually starting to reduce the interest rates by the end of the year? I just imagine the catastrophic effect that's going to have on the economy going forward.
Yeah, I don't see where they have a choice here. They're going to have to cut rates, and everything they're doing, even though they raised 25 basis points, it's a fig leaf, because everything they're doing QE again, because they're buying up all the bonds in sight. So it's inflationary in and of itself. And we talked about this during the pandemic, all the money giveaways they were doing, that it was going to come down to this. And now we're here. So what do you tell your clients, Eddie?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Yeah, and they actually had a chance. They had an option to do something about that. In 2020 and 2021, when we added the trillions and trillions of dollars to the debt, when they said it was transitory, it was not real. It's all going to go away. I don't know what the actual amount is, but it is 3, 4, 5 times the amount of debt that we have now as compared to in 2008 and 2009. So when you have all this debt, because there's a direct correlation between consumer debt, corporate debt, and the national debt, and how are people going to continue to service Americans, everyday Americans, blue collar, service that credit card debt? When they're used to paying 7.99, and now all of a sudden it's 22%. You've got corporations that are used to paying 3, 4, 5%, and now all of a sudden they're paying 7, 8, 9%. And now all of a sudden, if we have that inflationary pressure, they start reducing rates. It's going to continue to backfire. They could have resolved this years ago, but they just chose not to do anything. And Kerry, I agree with you. I mean, was it complete incompetence or was it on purpose? I mean, how did they not know? These are the experts. We all knew, but how did they not know?
Yeah, that's why they get the big bucks, to not know, to be the Pied Piper and lead you off the cliff, right?
That's right. That's right.
All right. So what are you telling your clients to do at this point? Gold, silver, cryptocurrencies, real estate, I don't know, private jet to get the heck out of here, get out of Dodge. What do you do?
You know what? It's we're being very, very conservative. Cash on hand, short-term treasuries, laddering them inside of a year. I'm not comfortable going past October, to be honest with you right now, especially now that they're talking about raising rates. And all of our portfolios, they've got precious metals in them, copper. I almost said copper, lead, and brass. The other 3 precious metals.
Copper's been a monetary metal throughout history, and it was in the United States till they replaced the penny with the copper penny with the zinc penny. The price of copper got too high, like silver. So I'm always reminded.
In silver's. Go ahead. Sorry.
I'm always reminded by Will Rogers, his little quip: "Invest in inflation. It's the only thing going up."
That's right.
Right. So that's what you got to do.
Fortunately, that's the truth right now.
Commodities, too, right?
Gold and silver. Yeah. I mean, you've got to commodities right now. I think that's probably, including precious metals. I mean, that's only for us. That's a great hedge. Crypto, honestly, I'm not a fan. It's just another fiat currency. I get the blockchain and why it's important. But there's just too many unknowns right now. So we're kind of staying away from it.
Hey, so I've dubbed cryptocurrencies kleptocurrencies because besides Bitcoin and Ethereum and a few others, they're just instrumentalities of kleptos out there who want to steal your money.
You're exactly right. And who knows? Now I think is it June or July this summer? when the U.S. national digital currency comes out. And so the impact that that's going to have on all cryptos, to include, Bitcoin, and, how are they going to regulate, Bitcoin and Ethereum? And, look at what Coinbase is going through right now with the SEC. So, how is that going to come about? There's just too many unknowns. And so I think being very, very prudent, very conservative right now, until we have a better picture of what's going on. And I think we will, over the next month, through the month of April. But it's, it's just kind of hedging our bets right now and preserving capital. Right? That's the key for us.
Return rather than return on investment, return of investment, right?
You know what? That's exactly, very well said. You're exactly right.
I wish I could claim originality for that, but these times when there's financial pandemonium, financial pandemic, you're much less concerned about your return. But looking at it, so do you put your money in money center banks, Citi, Chase, Wells, all of those good ones? Is that what you need to be doing?
Yeah, the big four, and that's that's the sad part. It almost seems like this is by design. They're pushing people out of the regional banks, and if you actually look at the numbers, depending on which data points you look at, it's either just below 60% or over 65% of all business loans come from these smaller regional banks, and they have the smaller footprints. And my biggest fear is that, we all pull our assets from these regional banks and go to the big four, those deemed too big to fail. And now all of a sudden that's going to stifle the growth of the economy. And it's counter to what we really need. We need these regional banks to stand strong, and continue to give these loans to these small businesses, which are the lifeblood of America, so that we can grow the economy. And
absolutely.
So I think, as long as you have under 250,000, per account, you're in good shape, and you'll get your deposits back. Plus, you're going to make a whole lot more money. I don't know if you saw Chase and some of the other big banks. So I'm at Chase, so I know this. They actually lowered the interest on an annual basis. It's even lower than it was just a couple of weeks ago, because they don't have to pay as much.
And they don't want your money, because what did they do? They wound up getting all the money in from the depositors that fled First Republic, and then they went and gave them $30 billion of their deposits to tide them over. This is a real failure of leadership, and they should have just come out right away and said, depositors are safe no matter where you are. If we have to inflate the currency to zero, every deposit will be paid, because it's not a question, the only time people, depositors want their money back is when they think they can't get it. When they think that they can get their money, they're never going to do a bank run. And you can't really have a bank run nowadays, because all you do is you get a check from this bank or a wire to that bank, but you're in the same system no matter what, right?
That's right.
All right, Eddie, so where do we find you out these days? How do we connect with you on the web, through social media, whatever?
Yeah, so EGSIFinancial.com. We're on Twitter at EGSI Financial, on Facebook, EGSI Financial, and our YouTube channel, which is EGSI Financial. So we're pretty easy to get to.
Yeah, very easy. Well, we appreciate you coming on. If you got a question for Eddie or myself, shoot me an email, kl@kerrylutz.com. And you'll find a link to Eddie's site in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. Eddie, always a pleasure. Thanks so much for stopping by.
Absolutely. Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.